Assalamualaikum and hello everyone. I'm Madam Lisa. Welcome back to my channel. I give lectures on financial accounting and reporting standards, and today we are going to learn again on how to prepare a statement of cash flow under the direct method. And our focus today is on a more advanced question, or in a way at an intermediate level, where we are going to prepare a statement of cash flow under direct method, which will also be accompanied by the disclosure notes, which is the statement that reconcile the profit before tax to cash flow from operation, as well as including also the cash and cash equivalent schedule. So let's start, right? So if you look in the information that you have here, you have the financial statements of Qistina Berhad. Berhad is the Malay words for limited, as at 30th of September 2008 as follows. So you are given a statement of profit or loss and other comprehensive income, where if you can see right after the profit for the year, there is an item other comprehensive income that come from the revaluation of surplus. And revaluation of surplus here, revaluation surplus coming from the property, plant and equipment, if you go detail and read the question. So then again, you are given another statement, which is a statement of changes in equity that shows a 3-column where you have your share capital and reserve, the 2 reserve there, that was the asset revaluation reserve and the retained profit. So you have the movement of the reserve shown there, and our focus is to look at which of this has got to do with the cash flow movement, because we are preparing a statement of cash flow. And remember, under direct method, it is the requirement of the standard for the company that opt for direct method to also disclose the statement of reconciliation, which is to reconcile again the profit before tax for the period to the cash flow from operations. We have this detail here, and you also have the important statement again, one more statement here given to you, the statement of financial position, and you are given 2 years comparative statement, which you are given the beginning of the year opening, that is 1st of January 2008, which is not 1st of January, sorry, that was 30th of September 2008. So this should be 1st of October 2007, and this should be 30th of September 2008. So we have the detail there, and it is more comprehensive because this is an advanced question. You have the PPE, the investment property. You will see the changes to investment property, the intangible assets, long-term investment. And you have the current asset with the cash and cash equivalent information given there. That is short-term investment and tax and the cash balances itself. At the bottom there, you have the share capital section and reserve, share capital and reserve, as well as non-current liabilities together with the current liabilities. Okay, the detail given at the bottom here is the additional information, where you are informed of what happened throughout the year for the development costs. So we are trying to look at whether or not the development costs bring any cash flow or use any cash flow. We're going to see that later. And you have the company Qistina, which is the name of the reporting entity, measured the investment property based on fair value model. Remember, under fair value model, there is no depreciation and there is also no impairment loss, right? And there was also information that there was an acquisition of investment property for the year, right? And number 3 is the depreciation charge. So you have to take note which of these are the information that are cash expense and which of these are the information that do not use cash, right? So for example, depreciation are non-cash expense, right? As well as the development costs that were written off were also non-cash expense. So you have the detail on the movement of the machinery that was realized or sold off for cash. This one will bring effect to the your investing activities. And number 5 is the property, plant and equipment costing 800,000. So this will also be under property, plant and equipment, which is under investing activities. So you have the detail also in number 6. The 7, 8, 7 is information on financing activities, right? Where financing activities will normally relates to the movement relating to your shares, yeah, the share capital and long-term borrowing, how you raise or repay the capital, right? Coming from the way of by way of shares, and also what are the cash flow relating to long-term borrowings, right? Okay, then you have the detail here, number 8, about the short-term investment that are part of cash and cash equivalent. So what are the requirements? A, you are asked to prepare the statement of cash flow for this company, Qistina, as at 30th of September, for the year ended 30th of September, using the direct method. So using the direct method, you should know the template or the format where it will start with cash receipts from customer, and you are going to show the gross cash receipt from the customer as well as the payment that and using your operating out cash flow. And then you have to prepare the cash and cash equivalent schedule. And also the last one is the statement of reconciliation. So these two is actually relating to the disclosure notes. So if you're interested to have this question, you can go down the link and take the question and print out the question before you start doing this question with me. So you have to prepare the statement of cash flow. So what we will do is we are going to use my color-coded approach again. So for your information, I teach cash flow using the 6 steps color-coded approach, where I will start by first doing the first step to prepare the template or the format of the cash flow. So the template here will be using the direct method template. I have prepared that for you. So, and then it will have all together 6 steps: number 2, number 3, number 4, and number 5. Maybe you can snapshot this so that you have a copy of what will be the step for us to prepare, right? And because we use color coded approach, the color codes are given here, where you will see that for cash and cash equivalent, I'll be using this green color. Investing activities, investing will be blue, operating will be purple, financing activities will be brown, and the non-cash and non-operating items will be blue, somehow light blue or turquoise. Let's start. So what is the first step? Of course, the first step is to prepare the template. So when you prepare the template, put the name of the company. So this is the name of the company. I've prepared this. Put the title correctly. So the title here should be Statement of Cash Flow as at 30th of September, right? So 30th of September 2000 X8, right? Okay, done. Then put the cash flow from operating activities. You should know that there are the methods of deriving cash flow from operating activities, and under the cash flow from operating activities, the sources of information are mainly from cash receipt from customer, as well as the payment that company made to the supplier, right? Those are the details. And cash flow from investing, leave a few lines. Cash flow from financing, and then you have your net increase or net decrease in cash and cash equivalent. So you are not sure whether a decrease or an increase, you just leave it like this first, and later you will put either increase or decrease later. So these are the answer to the cash flow statement, as you know, will come from the calculation of the net increase or net decrease in cash and cash equivalent. Okay, you have the template, and the bottom here I have the schedule done already for the cash and cash equivalent schedule. Okay, right, let's start with the second step now. What is the second step? So if I mentioned to you, first step is to prepare the template. Second step is to label correctly the opening and closing balance. So we have done the preparation of the template. Yeah, we have done that. Now we move on to the second step. What is the second step? The second step, I put it here, is you need to label correctly the opening balances and in the SOFP and determine the net changes. So I've already labeled here, yeah, the opening and closing. I've put a label there, opening and closing, yeah. And what you need to know is that once you have done that, you need to also determine the changes. So the changes between the beginning of the year, 1st of October 2007, and the changes at the end of the year. What caused the changes? For example, PPE, it seems there is no changes, but it's not really the case. We need to go and check and see whether there are any changes which is outflow or inflow, because we are preparing statement of cash flow. Okay, we are to do that labeling. Yeah, we have done that, and we are going to determine the net changes. So we are going to start with net changes coming from cash and cash equivalent first. So let's just go and check on what is our cash and cash equivalent. Yeah, so our cash and cash equivalent, I use green. Okay, short-term investment, there is some increase in short-term investment, 186. Cash, which is also cash and cash equivalent, there was 2562. There was an increase from 116 to 2678. Is there any more? We go down at the bottom here. Yes, somewhere here you have bank overdraft. There was a decrease in bank overdraft, right? So where there was a decrease in bank overdraft, what are the changes? There was a reduction. So now you have got your information for your cash and cash equivalent. What you can do now is to go and prepare straight away the cash and cash equivalent schedule. Total up these items that were in the green section there and put them in the statement of cash and cash equivalent. This is somehow prepared here. Okay, so I've already copied and pasted those information here. So put your cash and the movement. So there was an increase. If it's an increase, leave it as it is. For short-term investment, which is also cash and cash equivalent, anything less than 3 months is cash and cash equivalent. Right, next item I took from the statement of financial position is the bank overdraft. And the bank overdraft, we put in bracket, yeah, to differentiate between the account with debit balance. Bank overdraft is an account with credit balance. So the difference is a net change, which is an increase of 39, right? So the together it becomes 2787, the net changes, and this one is 3008, and this one is 221. So what you will do is this will be put at your somehow in the section that you have here, the last 3 rows in your statement of cash flow. So if you can see, 2787 will be your net increase. Why net increase? You have a figure which is as it is, so that was an increase. Unless you have a figure which is a negative or an outflow, then you will put here net decrease, but here is a net increase. So net increase in cash and cash equivalent 2787. 221 is your cash and cash equivalent at the beginning of the year. This one. Okay. 3008 is the cash and cash equivalent at the end of the year. So by now you already settled the last 3 rows in your cash flow. So that was the second step. Right? Make sure you go and settle the simple thing first. Next is for you to label correctly the other remaining things. So the remaining means whatever you have in your asset, liabilities, equity item. So just I'm going to do the labeling, yeah, later, but I put the changes first because we need to do the changes. So let's see the changes. Okay, these are the changes to the property, plant and equipment. It seems no change, but we need to check as well. Investment property, there was a net change of 560. Then okay, we do the rest for the other item as well. You can do that to your statement. Okay, we will be looking at the detail there. After you have done that, okay, you have already determined the net changes, not only to the cash and cash equivalent, but also the remaining asset and liabilities item in the software. So step 3. So step 3 is that you need to classify and color code the different items so that you won't get confused. So I've been taking this to be my color, which is operating activities will be purple. Investing activities, I will color code that as blue. And the financing activities, I'll use it as brown. So let's do that. For inventories, what you can do is you can start by doing the financing activities first. So I start by doing financing activities. This is the financing activities. So I will color code that as brown. So the financing activities are basically relating to your cash flow. Yeah, the cash flow that comes from the repayment of capital and borrowings. However, we are only interested on the cash received and cash payment made on financing activities to be disclosed in the cash flow. So reserve maybe will relate to some cash payment because dividends are paid using the retained profit, which is part of the reserve. So same goes here. Okay. Then with that, so I color code as brown so that easier for us to differentiate. Then you do for your the investing activities. These are all investing activities. So I use blue for investing activities. So that's blue. Yeah, that's the only investing activities that you have. And the rest of the item will be under your operating activities. Whatever item that does not meet the classification for financing and for investing, that will be classified as item under your operating activities. These are all operating activities. Okay, you will continue with this short-term loan as well, right? And okay, next we have done that. So now we go to the step 4. What is step 4? Step 1 we have done it. So step 4 we have done the step 1, 2 and 3. Step 4 is for you to go and determine the cash flow from financing activities and investing activities. How? By reconstructing the T account, but where necessary. The purpose of this action is to determine, of course, the cash flow, either outflow or inflow from financing and investing activities. However, in our process of trying to arrive at the cash flow, from financing activities, we'll have to adjust out the non-cash transaction and non-operating items that may have impacted the investing and financing cash flow. Right. So these are the thing that we will be doing that will follow the bottom up style. So let's go to the cash flow from financing activities. And cash flow from my financing activities will be looking at not only here in the share capital and non-current liabilities section in the statement of financial position. Information are also provided in the statement of changes equity itself. So all information here is related to what you have here is related to financing activities, right? Financing activities, for example, dividend paid. This is a cash flow relating to financing activities. Okay, financing activities. Right. So dividend paid 9552. It is a financing activity, so we'll put here in our it will be the item here. Okay, we put here payment of dividend, and that payment of dividend is a cash flow from financing activities. So the payment of dividend, there, if you can check the detail in the additional information at the bottom in there are no more information on other payment of dividend except for the one that were mentioned in the statement of changes in equity itself. So you need to go and check. Sometimes the information is given somewhere in the statement of changes in equity directly, or it is not given there. It will be given in the additional information. So none here. Next, so for the item that you have already done the investigation, my suggestion is that you need to go and mark them. So you mark them for investing activities we have not yet done. So I'm doing for my my items related to cash and cash equivalent. So I'm doing that to show that I have already made the investigation or I have already analyzed the detail. So the dividend paid here, if you need to check if there is any dividend payable here. So in your case here, there are no dividend payable. In case that was not given directly, you may have your dividend payable somewhere here, and you may have to reconstruct the dividend payable to find the dividend paid. But in this question, you don't have to do so. The next item here is to check what caused the changes to the share capital. What caused the changes to the share capital? So here there is no information that were given directly here in the notes or additional information, but it was given in the statement of changes in equity. So if you can see here, there was an issue of shares, right? Issue of shares. Issue of shares is a financing activities. If there is no information stated otherwise, we assume this issue of shares are for cash. So the changes here, if you see what caused the changes in your activities here, oopsie, right, in your activities here is the changes that relates to share capital. That was 2,400. So therefore that 2,400 is the proceed from issuance of shares. So this will be put in the statement of cash flow. You don't have to work out the accounts because that was a direct information. So let's see that. Where do I put here? Okay, I put here. I already prepared for you to save the time. And the information is here. Ordinary issuance of ordinary shares. Done with that. Whatever things that you are done, just give a tick there. For example, yeah, we have done this here, here. Just put some red so that easier for you to see. One more here. Okay, then next one, we go to our share capital. We are done. We go to our reserve. It was investigated through our dividend just now. Now we go to the next item under the financing activities, which is the loan. So the changes to the loan shows that the company has repaid the loan. So because of that repayment of loan, no information were given. So you will assume that that was due to repayment. Therefore, in your statement of cash flow, here you're going to put the repayment of repayment of long-term loan 110, and one more item is also under financing activities is the repayment of short-term loan. So the short-term loan is actually, this one is not under operating, but this is under financing activities. So the short-term loan, there was also a change, a reduction of 120. We pay the loan, so credit bank, debit short-term loan. With that, you have investigated the financing activities and you now get the total for your financing activities, and the financing activities will be 7382, an outflow, net cash outflow. So I will continue with the rest of the discussion in my next video. I'll see you when I will see you. Stay tuned for the next part of the discussion. And with that, I thank you. Assalamualaikum warahmatullah.